Ever wondered how traders control big positions with just a small upfront cost? The easy answer, calls. And I'm not talking about calls to a loan shark either. Let's break it down. Welcome, you're in the money. Hey, do me a favor. Hit the like and subscribe and share with others. Thanks. So, let's dive right in. With an options call, you can control 100 shares of stock without actually buying them up front. But how does that work? Well, I'm glad you asked. Now, this is not investment advice. Please consult your personal financial advisor before making any investment decisions. So, what is a call or call option? Well, a call option gives you the right, but not the obligation, to buy a stock at a set price, called the strike price, before a certain date. It's important to note that this decision should be based on sound research about the fundamentals of a company. We're talking Yahoo Finance, Seeking Alpha, or Morningstar. Let's say you buy a call option on Apple stock. Strike price $100, premium $2. That means that $2 is your upfront cost for the potential to buy Apple at $100, no matter how high the price goes. Did you hear that? As opposed to buying a single share for, let's say, $100, you're getting 100 shares for $2. I'm not going to get into the wealth-building potential in this video. Suffice it to say, this can be a real game changer. Let's say that Apple jumps to $110. Your option is in the money. Your gains can be significant, while your maximum loss is just the $2 premium you paid. Let's break down key terms. You have the strike price, the agreed price to buy the stock. Next, the premium, your upfront cost. The expiration date, when the option ends. Another term, in the money, when the stock price is above your strike. And finally, out of the money, where the stock price is below your strike. Remember, this isn't investment advice. Always consult a qualified financial advisor before making real investment decisions. Before trading live, you should probably practice on platforms like Thinkorswim, Webull, or Interactive Brokers. I think this is a great place to start because paper trading builds confidence with no real money risk. Well, my friends, that's all for now. But if you want more no-jargon guides to finance and options, hit that subscribe button. Let's keep building your trading knowledge.